You have the perfect strategy, you will find your supply and demand zones, and you're getting ready to execute your trade. But the market goes straight through your stop loss, and you might wonder why. You see, most traders fail because they suck at finding their bias. But in today's video, I'm going to guide you exactly step by step on how I go about finding my bias. That way you're never on the wrong side of the market again. And this is the exact same thing that I use for Asia and New York. Now, let me just get some simple things out of the way real quick. You guys need to understand the differences between these two things. First, you need to understand what is market narrative. Market narrative is something you build with economic news or stuff that is happening, major events that are happening in the world. So for example, we have war news, we have, for example, FOMC. All of these things are very important because this is what's going to give you your market narrative. This could be a bullish bias or a bearish bias. And now you need to understand the differences between a long-term bias and a short-term bias. You as a day trader should look at the daily time frame for you to identify the long-term bias. That means where is the daily candle going to expand to? Is it going to push up higher or is it going to push up lower or push down lower, sorry. And that tells you your long-term bias. Now for the short-term bias, you have the 4-hour, the 30-minute, the hourly, 15 minutes. All of those candles tell you your short-term bias, what is going to happen in the next 4 hours, hourly, 30 minutes, 15 minutes, etc. Those things are important. Why? Because you could still capitalize on those moves and make money out of those, and that's how I make money personally. Now what we'll go ahead and do, I'll go ahead and go over examples on TradeZilla for you guys to explain all of this stuff down in a nutshell. Over here on TradeZilla, this is Asia Open. We're going to go ahead and let the market play out for a little bit to see exactly what it wants to do before we take any entries or any executions. Before we do anything, let's go ahead and hop over to the 4-hour time frame. Do we see any supply zones that we are nearing? Nothing. The nearest one is going to be all the way up here. So that's pretty far for me to even look at for now. That's going to be more of a long-term bias. That's going to follow the daily time frame. So now we go on the hourly time frame. Okay, the hourly time frame has a beautiful supply zone that is right over here waiting for us, and price is literally tracing into it right now. We have rejected off of it in the past. Again, I would still want to see some kind of weakness towards it. Doesn't mean we have to break from it, but my bias for the next hour is that we get a rejection because we are in the supply. Now we go on the 30-minute time frame. Do we see any supplies? No, I mean, these just combined into one. Honestly, it's better. This is again something, so combined into one's a lot better for us to just find that 1 hourly candle and use that instead of using multiple ones. Okay, so now let's go into the 1 minute time frame. What we want to see is we want to identify, this is where it gets important. A lot of people mess up. You want to know where is your swing lows and swing highs. It matters a lot, and a lot of people mess this up. So where is our most recent swing low? This is Asia Open right here. So this is our most newest swing low. I'll go ahead and tap that in and we'll put it swing low. This is our most recent swing low. Let's go ahead and identify our swing high. So this was the most recent swing high right over here, which we broke out of. We put in right here. This is a new swing high. And yes, you're probably wondering, like, this is so close to one another. You guys are, these are not. What price is doing right now is in an uptrend, right? What we're trying to identify right here is this uptrend. We want to see this uptrend, right? You could say it's a trend. You could say it's a trend line, whatever makes you feel comfortable, right? The goal is to identify that trend. So we have figured out our bias, which is going to be shorts for the next hour. We have figured out what our trend. So far, we are in an uptrend. We are looking for a shift in that uptrend. So how do we find that? We have to mark these things out to understand what's happening next. So what is price likely to do next? Okay, it put in a new high, which means that this is our new swing low, and this is our new swing high. Is price going to reject that? Nope, this is our swing high. So right over here, this is our most recent swing high. So when price breaks this low, I would obviously want to enter in. If price continues to go up, I am not taking entry until we get out of the supply zone. Okay, so let's see. Price breaks this low. Obviously, when we're trading the live markets, you guys will see us taking the entries with a market fill, not a limit or anything like that. So what we'll do is we'll go ahead and place our entries at the swing low. Off of the break of the swing low, we'll place our stops above the swing high, and we'll target the most recent swing lows. We could target the swing low, for example. Let's go ahead and put this as a swing low. We could target this as a swing low as well. So that is another swing low. You have this swing low. Boom, 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 swing low. So you have all of these ranges right here, all of these swing lows. And when price shifts that direction, we will go ahead, we will see that. I promise you, I will explain it if I see it. If I see it, I will tell you guys that price shifting that direction, and it is likely to stop us out. But for now, my bias is for shorts because we have traded into the supply. We have failed this move and we are pushing lows. So we'll go ahead and sell limit. Let me go ahead and do, let's just say, for example, risk 3% of the account. So we're going to risk 3 or 5%. Let's be reasonable. 5% to 50K account. So we're going to risk 5%, which is risking $2,500 to make back 4,200. for funded, in your case, you as a trader with the prop firm industry, you're not going to be risking that much. So I'll do just 2%. That's 2 trades, you blow the account. Okay. I know it's going to sound like a lot, which I'll go over risk management in a whole separate video, and I'll explain those on how I trade with prop firms and use that to my advantage. Okay. So we want to take that entry off of this break with our stops above that swing high. So we know that it broke to the downside right here. This is a new swing low that we just put in. We want to see if price can go ahead and rally back down to take out these most recent swing lows that we have already put in right here towards our take profit. Now, obviously, our TP is going to vary. Sometimes you're going to have a 1 to 2. Sometimes you're going to have a 1 to 3. I used to use fixed RR, so if I'm risking this much, then I'll go for 1 to 2s. But in the case where this is what we're trading, I'm just going to use the most recent swing low. So this right here, 15 points, 8-point stop loss, or let's just move this down actually to the swing high. Boom. If price breaks this high, we want to be out. If price continues dumping down, we'll be in this trade. So far, this is just pullback. We're not worried about this. This is just pullback for us to continue going lower. So when I see price pushing new lows right here, okay. By this time, obviously, if I was watching this in the live markets, I would definitely be going break even on the position because there's no point for me to risk anything else. So let's go ahead and let this be break even. And does it hit TP? And we are out. Okay, cool. So we have to hit that swing low. Does it go lower? It does go lower. It does not go lower. It does go lower. Okay. So price goes lower than that and then takes out this swing low. This swing low, you guys can target however you feel, obviously, whatever you're comfortable with. Again, I'll go over risk management in a separate video. Stay tuned. But for now, we're just going to go over this. So that's pretty much in a nutshell how I go about this, right? Let's go ahead and go over another example just to make it simpler for you guys. But we have the new, what is this, Tuesday? So we have the new candle that just opened up right here. This is Asia open right now. Go ahead and see what price is likely to do. Do we have any supplies that we're looking at on the hourly time frame? For example, we're still inside this range. We have this supply right here, which we broke out of. The only supply that we have is all the way up here. Do we have any 30-minute supplies? This is maybe, I mean, this looks like something that we would be interested in. We're still trending in that, so I would not want to take this. This is the only thing that is kind of close. So since we don't have any crazy supplies that we look at, again, simplest way to go about this during Asia, because of the market being brand new, still just opened up. Session has just opened up. We have not put in low a day. We have not put in high of day, right? So we could look at the daily time frame, for example. We see that we broke it 2 up. That means we are pushing up. So overall move for the next day or for the whole entire day is bullish. But for now, what we're going to go ahead and do is look for a short move back down towards low at day again. So we'll go ahead and do is find our supplies. If we don't have any supplies, then the next thing that we can go with is going to be swing lows and swing highs. So we have our swing low right over here. Let's see, this is our swing high so far. Okay, so swing low, swing high. Now we got to see what price is going to do. Broke this high. So this is our new high. So far, I don't think this is anything. I don't think there's any other swing low that we have put in except for this, right? So this is the new swing low that we just put in right here. And then price broke this high. So that means this is the new swing high that we just put in. Okay. This is the swing low that we just put in. And this is the high that we're so far putting in. Okay. This is still the swing high that we have right there. So that's the swing high. This is the swing low. When price shifts this uptrend, the small uptrend that we're getting, we're going to get displacement to killing all of these lows right here, getting rid of all of these lows, potentially coming lower. Okay. So what we want to see is price giving us that retracement and then, or actually pushing this low and then giving us that. Unless if it doesn't, then we want to go ahead and just mark out the next swing low. So, okay, let's go ahead and market fill this. So market fill it, quote unquote. Again, I can't do that over here. Obviously, I'm not in a market order where I can just mark it in, but we have this swing low. This is really close. We have this swing low, and then we have so on. Again, you could target fixed RR. In this case scenario, I'll just target a 1 to 2. So that's all the way down to here. Again, we have a lot of swing lows that we could target. You target this low, this low, this low, this low, this low. Whatever your RR multiple, whatever you're comfortable with, again, that would help you a lot more. So risking 2% again of the account. Once we break this low, we are in. And again, even if you get stopped, and I hope this trade stops me out, but even if you get stopped out, the whole point of this is to teach you that you need to just be consistent with one thing, and that's it. So let's see what is price likely to do right here. This looks like it's pushing down. Okay, we got TP. That was a 1 to 2 RR. Again, by just identifying this shift in that structure, boom, done, easy, right? So we find out our bias for the next 4 hours. For the next hour, it's going to be shorts. The reason for that is because the way we're reacting around this whole area right here. So the way we're reacting around this whole area, we want to go ahead and shift it back down. Okay, next Asia session. This will be my last example. Okay, so now what we want to see is what price is going to do for the next open right away. So we see explosive move up so far. So far, again, explosive move up. We're going to just look at the swing lows. You know, one trick that a lot of people don't use, but you should, lines. You could use a line chart. Honestly, it's not that bad. If you find it hard to identify swing lows and swing highs, this helps. This helps a lot. So this is our most recent swing low right here. And if you want to use it to identify it clearer, go on the 5-minute. The 5-minute time frame is a cheat code. So this is what a lot of people mess up. A lot of people mess up is finding the swing lows and swing highs. But it's very important for your bias. So in my opinion, when you try and spot a reversal, this is how you spot it. Draw out the swing low. We know that that's swing high. If we break out of that, then we're in. If we don't, then we just simply wait. Okay, this is the new high, and this is the new low that we have. Okay, this is the new low, and this is the new high. Okay, let's go back. We market fill this dump right here. We'd market fill that and target the most recent swing lows. So all the way down to, let's just say here. Okay, I'll just target a 1 to 2. I don't want to, I mean, you could target all the way down to the lows or whatever, but I'm going to just target a 1 to 2 just to make it simpler and easier for us to all just kind of get the gist. Okay, so boom, that's my entry in off of using the swing low, and we're just gonna get round tripped. Okay, nope, and we hit TP, and there you go. So in a simple nutshell, this is how you go about identifying your swing lows and swing highs. This is how you also figure out your daily bias. Again, your daily bias could change. If you're looking at the daily time frame, then you're looking for expansion on the daily candle. What is the daily candle likely to do next? Is it going to continue breaking the highs and create higher highs? Is it bullish or is it bearish? If it's bearish, it's going to create lower lows, and it's going to keep breaking those lower lows and create more lows and more lows and more lows. But if you feel like, okay, we are bullish on the long-term narrative, my short-term bias is going to be shorts. That's what you should be looking for. Simple as that. When it's Asia, the market has just opened up. So in my opinion, again, when I've traded in the past, I would highly recommend you guys stick to the 4-hour, hourly, and 30 minutes. If you are using this for the New York session, you could definitely look at the daily time frame to see if we have taken the highs or lows of the previous day, and what is price doing right now. Is it going to continue that push up, or is price still consolidating and has not taken the lows? That gives you the narrative on what we're likely to do next. Okay, but with that comes the end of the video. Test the concepts for yourself, see how you guys like it for Asia session. I hope this helped out a lot, and comment down below what you guys think and what you guys want me to go ahead and upload next. I'll see you guys on the next one. Peace out, everybody. Take care and love you all.